My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey gang, welcome back. Let me ask you a question. Most of us get into real estate and real estate investing to create freedom, time freedom, money freedom, location freedom. But the question is, how many people actually accomplish that? Well, today's guest, Mike Preshman, has done exactly that. Thanks to real estate, Mike is a free guy. In fact, I was just reading that Mike and his family recently spent 6 or 8 weeks or something crazy in traveling in Europe, if I'm not mistaken, Mike.
That's correct.
Thanks to your real estate portfolio. So welcome to the show. Great to have you.
Thank you for having me. Excited to be here.
So Mike, give us a little snapshot of what your portfolio consists of as of, the end of the year 2025.
Sure. So I'm in the Boston area. I've been doing multifamily for about 10 years. So I started out kind of doing vacation rentals, kind of Airbnb, that kind of stuff. And then kind of once kind of that I quit my job and built up a little bit of a business, I got into multifamily. And so the business, now we have 220 units. We don't raise capital, so it's basically self-funded. And so we kind of built up sort of a machine, kind of a snowball machine where we started out with one investment, and then kind of that started cash flowing, and then kind of invested the funds. And so over the last 10 years, kind of we were very fortunate with the COVID and the inflation and all that kind of stuff to kind of build up a pretty massive portfolio in the Boston area that really kind of supports our lifestyle. And so now we're kind of in this stage of stabilizing, looking for really value add assets and kind of building a portfolio that generational wealth and kind of less hustle, going to court, dealing with difficult tenants, all that kind of stuff. So I've been through it all kind of, and here to kind of share my experience and kind of what I've learned and where I'm going.
Yeah. So Mike, let me ask you this.
Yeah.
How did you snowball the portfolio, self-financing it from 0 to 200 plus units?
Sure.
About a decade. Yeah. What did that kind of look like without going into each specific deal, but kind of just give us the idea of how you're able to do that, if you don't.
Sure. So about 10 years ago, we started with the vacation rentals. And so vacation rentals on Cape Cod, Massachusetts, we were very fortunate to kind of get into that business at the right time before it was oversaturated, before kind of everybody got into it. So we were really cash flowing a very substantial amount at that time. And so we were
single family homes.
Single-family homes. So we had 3 large single-family homes that we bought around $400,000 at the time.
Wow.
That were cash flowing maybe like $50,000-$60,000 a year. And so each, right? And so basically we were able to reinvest all of those funds and kind of start with 1 6-family, then a 4-family, then a 9-family. And so
you had the short-term rentals, creating the cash flow, keeping the lights on for you and the family.
Yep.
And also the excess was going in to purchase smaller multifamily properties at that time.
Exactly.
Okay.
And so that was kind of generating kind of the cash flow. At the time I was still working. And then kind of there was a point where the salary was substantial enough. There was enough coming in that it made sense for me to quit my job. And so we ended up kind of buying another property and another property. I was also throughout this whole time, even to this day, I still do house hacking, right? So we have house hacking where so I live in a house that's kind of a beautiful house. It's a big house, but I don't need the whole house. And so part of the house we rent it out, and it basically pays our whole mortgage, even though our house is 5,000 square feet. I live almost for free without paying a mortgage, right? So that really has helped with, and for the longest time, So now, as you said, we did go on vacation this summer. Too long, 6 weeks. I have little kids, right? So it was it was an amazing vacation, but it was 6 weeks is kind of a long time to spend in Europe. So next year, I think we might do 3 or 4, at most. But for the longest time, I was very careful about my spending, right? So everything would go back into the business, right? And so building up that cash flow over the years has, eventually kind of it started to, so a few things kind of worked out where we had, a lucky kind of deal where we bought something and it just kind of, the rents were really under market. We were able to raise the rents and they really exceeded all expectations. So that one building alone that we purchased about a year ago,
refinance it.
You didn't even have to refinance. It was just cash flowing. We bought it for about $2.5 million, and it's cash flowing maybe like $14,000 a month, right? So just an amazing, right? So you stack enough of these kinds of deals, and it gets you to enough cash flow where it supports your lifestyle, and you're able to reinvest and kind of keep that snowball going. So that's been my strategy, right? And it's been effective. But as I said, so I deal a lot with like Class C investments, right? And so multifamily, not in Boston, but kind of the suburbs like in New Hampshire and Western Mass and Rhode Island and so forth. And so we have a lot of oftentimes difficult tenants. I'm going to court tomorrow. I was in court last week, right? So there's kind of a lot of...
and you're self-managing everything, I guess.
We have some third-party managers, but I'm also very involved in the business, right? So that's part of the equation, which is not what everybody will recommend you do, but it's what's worked for us in terms of this thing. But now we're looking to slowly phase out. And the strategy for that is not to get better managers, but to get better assets, right? And so I
better assets, better tenants, less headaches.
Right. And so that's where now I'm kind of slowly transitioning into commercial, right? So I'm looking to get into commercial assets, trying to join some groups that are focused on that subject, right? And
so kind of like triple net lease type properties.
Yeah, triple net lease, industrial, retail, and deal more with tenants that are a little more professional, and so a lot
more professional.
Exactly. Yeah.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, that's interesting. So what have you discovered in this journey into commercial properties, into triple net lease type properties? Have you taken any down, or are you just kind of in the preparation phase right now?
Preparation phase. So there's a couple of masterminds that I've been, sort of involved with on this subject. And so I've been putting myself around people that are doing this. And so I've been doing a lot of underwriting, right? And kind of really, talking to brokers and really trying to build up that muscle in terms of getting the reps in, right? So I'm trying to really put myself in a position that when a property comes along my desk, that's a good deal, I'm ready to pounce, as opposed to kind of, always be kind of underwriting.
Yeah.
Right. And so for me, kind of the way I operate is I really need to build up that confidence internally, right? To just really know the numbers, really understand kind of what I'm looking for. And so at the moment, it's strip malls, it's industrial, but just really, I've been looking even into self-storage, even though I know that self-storage has been kind of when, the cap rate's really compressed. And so it's really been not an asset class that has a lot of good deals, but I feel like maybe it's turning around a little bit, and maybe there's some opportunities. And so I've been kind of underwriting that as well, but we'll see. So for the moment, my bread and butter is still multifamily, and for sure, if there was a good deal or something that was more manageable, I would take it on. So right now with 220 units, we have a couple of properties on the market. So we're looking to sell a few things and then reposition. So do a 1031 exchange into a better multifamily, or, but for sure,
or industrial,
or industrial and commercial, etc. But it's a challenge because.
So do you still have those original 3 or 4 vacation properties?
We have one left. We sold 2 less than a year ago. So we sold 2 end of last year. So I'd mentioned I bought them for 400. I sold each one. So we sold each one for $1 million, basically. Nice. So they appreciated well, but it was, 10 years since we purchased them. So that's kind of the market. And so we took the funds from one, and we did a 1031 exchange to buy a 40 unit. Mm-hmm. And then we took out cash from the other one, but we didn't have to really pay any capital gains, but because we did a cost seg study on the property that I mentioned, the $2.5 million property. Yeah. And so we basically wrote off the taxes. So it was kind of worked out. I mean, that's kind of the
that's beautiful. So you've done a lot of things right, it sounds like, Mike, over the years. Congratulations on that.
Thank you.
What do you, now that you're part of these masterminds, you're kind of hanging out with some other real estate investors, you're like, when you see what other people are doing,
yeah,
where do you think a lot of people are going wrong?
So first of all, for sure, I make a lot of mistakes, and I'm.
No, we understand that, but I'm saying, looking at other people, you're in a very envious position.
Yeah.
There are tons of people would love to be in.
Sure.
Other people are trying to kind of do what you're doing, but they're doing it differently, and they're not having the same level of success. Why do you think that is?
So I think part of it. So I think these masterminds groups have pros and cons, right? So I think you have to be able to think independently. And what I mean by that is kind of like the real work happens in the dark, right? So that everybody is using Instagram and right. So there's just kind of a lot of, being out there, right? And kind of like talking, going to conferences and all this kind of stuff, but
posing and posturing,
sort of, right? I mean, not everybody, not necessarily, right? But I think the real kind of meat of this game, for me, right? So some people are very good at promoting themselves and build up a huge network and write books and all that kind of stuff. And maybe one day I'll do that as well. But for me, what's worked is really just kind of, I'm not a bad negotiator. I'm quick to pounce when I see a deal. I'm very aggressive. But at the end of the day, I really kind of study the market and really, so before I buy a deal, I'll need to underwrite and look at like 100 or 1,000 deals, right? So I really kind of, and then, so that really de-risks my investment, right? So I really understand. And so then, and so I'll give you an example, right? So if I I don't take any investment, right? But a couple of times I took like $100,000 as a debt investment, right? So it's not equity, it's not partnership, it's just debt. And so the reason why I feel comfortable doing that is because first of all, I have the net worth or whatever it takes to pay it back if I have to. But second of all, I'm so sure in the deal that it makes sense for me. Like it's not a risk, right? And so so therefore, even if I'm paying somebody 12% fixed, right? At the end of the day, I keep the majority of the upside. So if I buy something for $2 million and it becomes $3 million, I keep that extra $1 million, but I have paid them out, 12%, so $12,000 a year over, right? So I pay them $40,000 as opposed to $500,000 kind of a thing, right?
Right.
And so, but I think that comes from, just studying the numbers. Like I'll give you an example. Like I was buying a property that I wasn't really sure what the rents are in the area, and so I ended up cold calling 50 or so businesses in the area to really understand like what their employees are paying for rent, looking for rent, what's the demand for rent, right? And I ended up not buying that property, right? But that was kind of like it was an investment. It was like $3.5 million. Like it was, and it wasn't really clear what the rents can be, right? So like I used Rentometer, I used all these different techniques, and I still felt like I had to, even though it's not like I love cold calling, right? But somebody else, kind of like, but I'll do what I have to.
Yeah. So what I'm hearing you say, Mike, is you're all about making sure that you've done your homework first. Like you looked at least 100 deals, if not more, in that particular asset class or that market.
Sure. Yeah.
If you need to pick up the phone and get clarity on things, you're willing to crank out as many phone calls as you need to kind of really get to the bottom of things. So you're a dig deep kind of guy, not a superficial, looks good, feel good, let's go with my gut kind of guy.
I'd like to think that, but I'll say that it does get to the point where I feel so comfortable that I do back of the napkin.
Well, after you've done all that stuff.
Exactly.
For
Right?
sure.
So, so now if I'm doing multifamily in a market that I, back of the napkin works just fine.
I'm just curious, what did you do before you got into real estate, Mike?
Computer science. I was
Very
a tech
analytical kind of guy.
Yeah. So I have a computer science background and master's, and so that was my background.
Okay, that explains.
And like I used to play chess and all that kind of stuff. So
Yeah, very
yeah. So I like
cool.
Yeah. So
Well, hey, congratulations, Mike. That's wonderful. Thanks for sharing your story here, and congratulations on your success. And I know just based on talking that you getting into industrial or commercial, that kind of stuff, triple net lease stuff, it's going to work really, really well for you. Plus, you'll get rid of a bunch of the headaches that you're not really having that much fun with dealing with, type C tenants, especially residential tenants.
It's a different game. It's
a different game. There's other headaches, I'm sure.
There's some sharks there. There's some
sharks. That's true.
Yeah, you got to be careful. Yeah.
I think you do well. So if people want to connect with you, what's the best way? Is it LinkedIn?
LinkedIn, they can, directly my email, mpresh@gmail.com. If anybody has any questions or wants to chat, I'm always open. Please reach out. Happy to connect. And
Awesome. Yeah. Mike, thanks so much for being on the show. There's been a lot of fun.
Thank you so much. This was great. I really appreciate it.
All right, everybody. See you on the next one.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.